Welcome to Jade Capital Partners midweek webinar. Before we begin, it should be noted that any advice is of a general nature only, and your personal circumstances have not been taken into consideration. Thank you for joining me. My name is Rob Clayton. Now, I'd like to begin this week's webinar with the Australian dollar. And as you can see from the last 24 hours, the market stabs up towards that recent congested area around 76.80 to 76.90 and has actually backed away from that level just to a low of 76.40. Now, current price action at the moment still offers a mild bullish trend. But saying that, I'm looking for any advances towards 76.85 to 77.20 to 50 to fail, like it recently did. As you can see, stabs above that 77 cents, and clearly from the last time ended posted an outside range day and two heavy day candles. So you can see at the moment we did get a move up last night, rejects that level, but it hasn't backed away. But when you look at the 4 hour, we do have a short-term intraday trend, which currently holds around 76.30. So in the next 12 to 24 hours, it really depends on what's the strongest. And at the moment, I would say that 76.80 and beyond will eventually fail. Supply will probably overgain the situation of a fall and see a move through 76.30 and look lower towards 75.80 and down to 75.20, which is where I've highlighted here. So I feel that the market's coming pretty much to the end of its bull run since 74.5, and these strong candles that you can see here are slightly getting weaker now as we approach the top side of the range. Interesting to see how yesterday's price action, euro completely backed away from that resistant area around 112.70 to 112.80 levels, you can see here, which I've highlighted clearly. And the last time we went for it was just a brief 4 hours and then collapsed, retested it and collapsed again, stabs, collapses, retests it and falls away again. So to me, the bears have clearly camped out from this region, and I'm looking still towards for a target of this week into next of 111.20 to 40. Now, if we look at the dailies, like the Aussie, the technicals haven't completely come through to support the downward case, but nevertheless, the shorter term is breaking down, and going by the price action, you can clearly see that the market does not want to sustain up towards that top side of the range. As I say, reassess from 111.20.40 as we could be looking lower down towards 110.50 to 110.75. Even if we do break above that 112.80 level, resistance gets harder, or supply should increase as it approaches the level of 113.60.65. The dollar-yen story is still very much on a roller coaster ride, as the market still looks towards that 99.40.60 region. Now, last time we got down there, we didn't last more than a couple of hours. So any move under 100, I'm not in favor to hold short positions, purely for the fact that we've never sustained there, as I say, more than a couple of hours. Once here towards this region, 1, 2, and this time it's not even approaching that level. The oscillator is starting to come through towards the upside. We are oversold at the moment on the dailies. So if I'm oversold, I am waiting to see this sort of pattern come through. And once we get above 20, should kick in and see a further rally up towards the first resistance coming in at 100.90.95, and then above that at 101.50 to 65 to 102.60.75. Now, with that all said, If we do see a move back to the downside, as I mentioned, the support comes in at 99.40.60. Beneath there, firmer at 98.60.65. Well, sterling pretty much still in its current downtrend since the retreat from 130.40.55 area, as you can see here, early September. And then we had 1, 2, 3, and now currently retreating away from the resistance or the downtrend line of 130.40.60 or around 130.50.80, which I'll put in the report, looks towards support now 129.75, and I believe this will go lower, and I'll be looking down towards 129.10.20 to 128.45.55. Now, I have mentioned this in the report. If we go under 127.75.90, which is where the Brexit sort of low was recorded, we could be moving into a region last traded around 1985, which looks towards the levels of around 118 to 124. Now that's only confirmed if we go through 127.75. In the meantime, let's look at the initial support at 128.45.55, which is just beneath here. You can see if I just drop just around this level here, as you can see, recently respected again, and just holding above there now. So, but we're in a downtrend, clearly from the tops here. That came in roughly around 134.5, and this downtrend, if it holds, but there is no trend from the ADX, so this gives me a little bit of concern that if we do pop through that top side of 130.60 to 80, then we could see an extension up towards 131.20 to 131.80, but unlikely at this stage, and I still feel we've got one more test down and then reassess from there. This pattern in gold, you can see back in August we topped out at 13.52, found a base, or more of a pivotal point, which I've highlighted here on the dailies at 1300, and you can see here why. Rejects in April, fell back to above that 1200 level, stabbed through it, rejected again, then broke through it, and then has managed to sustain above this level ever since. So let's go back into the slightly shorter time frame. So we've got a downtrend from, as I say, in August, bounces off that 1300 level, retest the top side of 1352, drops away, demand return just in front of that level around 1305 to 06. Fuels a rally back up towards a high of 1343, and now overnight tumbled and crushed the support at 1328. Now, in light of the current price action, and you can see here we are trending very clearly on a 4-hour pattern. The minus die is pushing through that 25. The ADX is pushing up as well. The stochastic is coming down. Is that a move through 1322 would actually expose that downside pivotal point of 1300. Now, I'd like to mention from that level of 1300, if we see a sustained break, then this gives a whopping $50 fall, and I'll be looking for the move down towards this level around 1250 and reassess from there. So do keep an eye out on that level if you're trading from the long side. Then a break underneath that 1300 would expose and probably trigger stops to generate this move down for a $50 fall. But technically we're not quite there yet. But on the 4 hourlies we clearly are. So you can see here the shorter time frame is strengthening as the market falls away. Oil pretty much still contained by that resistance of $46.50 to 70, especially from the retreat overnight. It does still look that the market is holding towards that $43 a barrel. The daily oscillator is coming through to the shaping up to that downside to reinforce that move. And if we look at the shorter time frame, the ADX is clearly in swing of the trend down, And also, if we note, we've got the minus die just coming through now to confirm that as well. Stochastics in play. So I'm then looking towards that level of $43 a barrel. Reassess, as we could be looking lower towards 39.5. But I'd like to see how the market trades and responds towards that level of 43 before giving that call. The S&P, well, this week we did break through that short-term trend. Market now rallies back, but you can see here there seems to be a level coming in around that sort of 50-55, which was like the previous challenge, fell away, didn't quite make it, did make it, but didn't sustain and gave it all back, and now it's very hesitant to go through that top side of around 21.50-55 on the S&P. In light of the 4-hour, not fully bearish, however, the daily is also not completely coming through to the support the downside to give any kind of a bearish case that I would like to see a move to 20.98. Nevertheless, at this stage, the weakness is coming through towards an objective or short-term support at 21.34, and a break underneath that level of 34. Then yes, I'll be looking down towards that region of 20.98. Or should I say 2,104 to 2,098, and reassess from there. Any upside gains should still top out towards that 21.55 to 65 area. And to wrap up with the SPY, market's broken the shorter term uptrend you can see here, and now, interestingly enough, is seeing this support become resistance after 3 challenges have failed towards the upside, and now the market is breaking down. If this pattern continues, then I'm looking for a move towards a potential challenge of 53.5, and then lower down towards 52.90, and reassess from that region, just where these peaks are. And I'd say that until we start seeing the US stock market breaking down, we could find demand coming back to that lower side around 52.90 to 53.10. Any advances? Well, you can see here that we have got a short-term cap coming around about 54.25, and above that, higher around 54.45 to 55. Well, that concludes for my midweek report. Thank you very much for joining me, and I hope you enjoy the rest of the day and the rest of the week ahead.